What's up, guys? We are going live today. We're going to be talking about real estate 101, and we're just going to have a conversation um, about real estate. We're going to be talking about fix and flipping. We're going to be talking about wholesaling houses, and we're also going to be talking about Section 8 rentals. So, let me get a chance to set up real quick. About to get started in 1 second. So basically, this call is just going to be just a call where I basically just answer Q&A questions, right? I'm answering a couple of questions from some students of mine. They have some questions, so I just wanted to make sure I was able to answer those questions. So the first one is, how do I get started in real estate with no money and no credit? So I always answer that question with when you're talking about starting real estate with no money, no credit, the first thing I say is start off with wholesaling houses, right? Wholesaling is the fastest way to get into real estate, literally with no license, no credit. You do need some money, but not a lot of money to get started, right? Some of the ways that you can start with when you don't have no money, let's talk about that first. You have driving for dollars. Driving for dollars, of course, is when you actually driving in neighborhoods and you're actually locating vacant properties or distressed properties. The goal is to be able to get those addresses. When you get those addresses, then you want to be able to skip trace those addresses because we're trying to look for the owner. Once we get the owner's information, then at that point we can get a phone number and then we can contact them and we can text them, we can cold call them, or we can send them a ringless voicemail. And the goal is to be able to ask them, would they be interested in the cash offer for that property? So that's one way, drive for dollars. Then you also have bandit signs, right? Bandit signs are those signs that say we buy houses. You put your phone number on there and put them out there in your area and you wait for calls to come in, right? We mentioned texting. So we're texting, using different text softwares, or we can use AI bots inside of our CRM to text sellers. We mentioned ringless voicemail as well, or ringless voicemail. We're dropping voicemail drops into these sellers' phone numbers, leaving a voicemail to ask them, are they interested in selling? And if they are, to contact us so we can have a conversation. And then again, we like cold calling, right? Cold calling is when we get a dollar, we get a list of numbers, whether that's from a drop for dollars list or it's a list that we pull from PropStream, and we can take that list, those numbers, we can add them into a dollar like a Call Tools, 𝐬𝐮𝐬𝐽, Mojo Sales, and we upload that list and we dial them, right? We can use a single dollar or a triple dollar. Triple dollar calls multiple people at a time. Single dollar calls people one at a time. So once we get a phone number, the goal is to get a phone number from that seller, right? Once we get a phone number, again, we can do multiple things. And, we also, if we're on a shoestring budget, we can also go to the courthouse, because when you go to the courthouse, now you have multiple lists that you could target. We could target a probate list, right? So when people file for probate, they go to the courthouse, right? And when they go to the courthouse, they have to file for probate records at the courthouse. So all of that information is there. It's public records. They're leaving real information, real phone numbers, right? Now we're looking for administrators who are trying to file for the estate. So we're trying to contact them. Now, the only time when it comes a challenge with probate is when an attorney files it. So if an attorney files it, then typically, we don't necessarily like to target attorneys, but that's one way, probates at the courthouse. You also have tired landlords when they're filing for eviction. So you're looking for the dispossessory document that the landlord filed. They put their phone number on there. Again, we need that phone number to contact them, right? So you got dispossessory documents that they file for evictions. We're looking for those documents for landlords. Probate document, we're looking for the administration paperwork that they're filing to become the administrator. So that's probates. Of course, you can, go out the divorce list, tax lien, tax list. You may be able to get code violation list at the courthouse, but typically those are the lists that we're looking for at the courthouse, right? And we're talking about you don't have a whole lot of money, you're just trying to get your feet wet. you're just trying to get out there and get some things started with a limited budget, right? So we talked about wholesaling houses, and wholesaling houses, let me just break it down. That's essentially when you're getting a property under contract at a discounted price, right? Once you get that contract, now you have equitable interest. You can assign that contract and look for you a buyer. So let's say we got a contract with a seller for $100,000, right? But we want to assign the interest of that contract over to a cash buyer who may want to pay us $110,000. So we have a $10,000 difference. 110 with the buyer, 100,000 with our seller. That $10,000 could be your assignment fee if you assigned your interest of that contract over to that cash buyer. So we didn't use any of our money. We didn't use any of our credit. We leveraged the buyer's money to pay off the seller, and then we kept the difference, which was a $10,000 assignment fee. So that's a wholesaling. Essentially, you get into the money. To the property, to the transaction with limited to no money. So that's wholesaling houses. And I believe that everybody who's getting into real estate, that's the first thing you need to do is you need to get into wholesaling. You need to find out, how do I locate buyers? How do I locate sellers? How do I do marketing? How do I do sales? What do a real deal looks like? Because once you're able to crack the code of knowing what a real deal looks like, everything becomes easy from there, right? So that's one of the things you want to definitely do. So let me pull up my notes. That's answering that question. The second question is, what is the biggest mistake first-time investors make, right? So I think, like I was saying earlier, one of the biggest mistakes that most investors make is not really knowing what a real deal looks like, and they overpaying, right? So we always talk about you make your money in real estate on the buy, not the sell. So once you buy right, you're positioning yourself to be successful in that transaction, no matter if it's a rental property, if it's a flip, if it's a wholesale deal. If you get it under contract and you buy it right at the right price, then you can always make money on the back end. So that's one of the things I see most new investors make, is they're getting in over their head by they're being overpriced in the beginning, and when it's time to go back and sell it on the back end, a lot of their profits is not there because they did not buy right. And just being able to understand the comps, understanding the ARV, the after repair value, right? A quick formula, you could take the after repair value, right? You look in that area where the property is, look and see what the property is worth in its as-is condition. That's the after repair value, the ARV. And then some people use the 70% rule, where they do 70% of that price, and that's your all-in purchase price plus repairs. But in the current market that we're in, we like to go 50 to 60% of the ARV, right? We want to be in it at a discounted price because we are currently in 2025 in a buyer's market. So we want to make sure that we're in it at a discounted price so we can sell it back to a buyer at a discount, because buyers are looking for discounts, being that it's a buyer's market. So we got to be in it at the best price possible so we can make money and the buyer can make money, right? So that's one of the mistakes. Again, I'll just leave that there, but that's one of the mistakes I see a lot of new investors make, is they just not in a deal at the right price, right? So you want to make sure you in it at the right price. And for everybody's watching, I have a free gift that I give away, my 6-figure blueprint. If you go to www.freevirtualmasterclass.com, freevirtualmasterclass.com, you'll be able to access my free playbook. It's nothing for sale. It's just my gift to you for watching this episode. So I'm gonna tackle one more question. Should I flip this house or rent it out, right? Depends on your goals, right? It depends on your goals. Like if you come across a deal, the answer, the question was, if I come across a deal, should I flip it or should I rent it? Again, that solely depends on your goals. It really depends on where you are financially. Again, what your goals are. What do you plan on doing? Are you ready for a fix and flip property that you may have to get a hard money loan on? Do you have the money to be able to put down and get to the hard money loan? So you're going to have to come up with some upfront money, right? And even when you get the loan approved and everything goes well and you put down your money, you still going to have to float some of the repairs before you get compensated back. So keep in mind, if you're going into it as a fix and flip, not only you're going to have a down payment, but you're going to have some money to float it before you start receiving your draws. From a rental standpoint, depends on how you get into the deal. Again, with the DSCR loan, you're going to have to put some money down as well. You may be cash flowing in the beginning, but you want to make sure that once you look at your numbers, that the property is cash flowing, and I like to be a cash flowing 500 and above, right? When you start getting to the 300, 400 price point, cash flow wise, I can see that being ate up, with the wrong repair coming out of the blue, right? It'll wipe your whole year's worth of income out. So I like to say 500 and above cash flow for a rental property. And once you crunch your numbers, once you do your PITI, once you know what your tax and insurance, everything's going to be, maintenance, property management fees, then you see based on the rent amount in that area, are you profitable? Are you cash flowing? So that once you crunch those numbers, that'll let you know, is this a flip? Is this a rental property? Right? So again, it's based on your goals, it's based on your financial situation. And then again, the numbers have to make sense. So that was it, guys. I'm gonna start doing these lives more often. You in the Real Estate Pays Me YouTube channel. Make sure you guys go ahead and subscribe to the channel. Subscribe to the channel, up and coming channel, trying to hit the ground running. My goal is to provide so much value, so much content that you can learn from. And again, Real Estate Pays Me mean that it don't only pay me, but hopefully the goal is for it to pay you as well. Again, don't forget to download my free 6-figure blueprint by going to www.freevirtualmasterclass.com. Make sure you guys follow me on social, Instagram at Uncle Bill Buy Houses, TikTok at Uncle Bill Buy Houses, and Facebook Will Galloway. And again, subscribe to this channel. I'll see you on the next live.